Hello everyone, welcome to EduTap and welcome to today's Finance 360-degree session. So in today's session, we are going to discuss a very important master action, the notification, the press release that the RBI has released. That is regarding the TREDS platform. Okay? So RBI allows credit guarantee cover on TREDS, simplifies the MSME onboarding and streamlines the capital requirements. So basically for the trade receivables discounting system, for the TREDS platform, the RBI, for the trade system, the RBI has released the detailed directions for 2026. So the update has been provided by the Reserve Bank of India, and this is the master direction that the RBI has released regarding the TREDS platform. So first of all, give me a thumbs up if I'm clearly audible and the screen is visible. And the directions have been released on 23rd June 2026. That is very recently only. These directions are going to be important from your descriptive as well as from the objective perspective. So the facts, the data we will discuss for the objective as well as this direction is also important from the descriptive perspective, because the trades is a very important platform. It is a very important system for the micro, small and medium enterprises. Okay. So all of this we will discuss, that what is the trades platform or what is the trade system, as well as what are the changes that has been brought by the Reserve Bank of India, what are these directions for the 2026. So all of this we are going to discuss. There is the major update that the RBI has released for the trades, for the platforms, for the system. So let's get started with today's session. I hope that everything's fine. Okay. So the RBI allows credit guarantee cover on trades, simplified the MSME onboarding, and streamlines the capital requirement. What is the capital requirement now? What is the net worth requirement now? All of this we are going to discuss, which is going to be very important from the objective perspective, as well as we will discuss that how you have to cover the article, how you have to cover the directions, which are also important from the descriptive perspective for your phase 2 examination for the RBI grade B. Okay, so let's get started without any delay now. And before starting with the session, do subscribe to the YouTube channel of EduTap so that you continue getting the relevant videos, and do join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. Okay, so in the Telegram channel of EduTap, you will get the PDF of the session. So now let's get started. So RBI, the Reserve Bank of India, Trade Receivables Discounting System Directions 2026. So these are the directions that the RBI has released recently for the trade receivables discounting system. This system is specially provided for the micro, small and medium enterprises. Now, before starting with the trades and before understanding the idea of the system and the platform, first let's understand the data that the RBI has provided, or the statements that the RBI has provided for the MSMEs. So at the start of the directions, at the start of these directions, the RBI has stated that the MSMEs are of great importance in India's economic development, serving as engines of growth and drivers of socio-economic progress. So basically, the MSMEs, they hold great value for a country like India, as well as because you have to prepare from the descriptive perspective, you have to collect the data from various sources. If a topic is regarding the MSME and the MSME is quite in news recently, so a descriptive question can come from the MSME, and that's why you need to have the data collected for the MSME. And in the economic survey of 2025-26, there are various data points that were stated for the MSMEs. So as per the PIB, from the Economic Survey 2025-26, MSMEs form the backbone of India's industrial economy, says the Economic Survey of 2025-26, tabled in the Parliament by the Union Minister of Finance and Corporate Affairs, Srimati Nirmala Sitharaman. The Economic Survey mentions that the MSMEs accounts for approximately 35.4% of manufacturing, around 48.58% of the exports from our country, and 31.1% of the GDP in the country. With over 7.47 crore enterprises employing over 32.82 crore persons, the sector holds its position as the second largest employer after the agriculture. And globally also, the MSMEs make up about 90% of the businesses and are responsible for over 50% of the total global employment. So you can understand that how important the MSMEs are for the Indian economy, as well as the MSMEs, they are also very important at the global level. So MSMEs, the RBI has also stated, so this is from the RBI, directions of 2026. In the start only, RBI has stated that the MSMEs are of great importance in India's economic development, serving as engines of growth and drivers of socio-economic progress. Okay, and these data points you can use in a question that is regarding MSME, or that is anyway related to MSME. Now, why this trades platform is required? Because the MSMEs, they face constraints, they face limitations, restrictions in obtaining adequate finance, particularly in terms of their ability to convert their trade receivables into liquid funds. So what are the trade receivables? Trade receivables are the funds owned to a business, owned to a MSME by its customer following the sale of goods and services. Okay, so here, try to understand that, let's say there is a MSME, micro, small and medium enterprise. Let's say it is a small enterprise, XYZ. Okay. Now it wants to sell, or it is doing business with the buyer, that is ABC. Okay. So MSME is the seller that is selling the tables and chairs to the entity ABC. Now the buyer has purchased, or the buyer is willing to purchase the tables and chairs worth 1 crore. But the buyer is saying that I will only be able to pay the money after 2 months. But the MSME requires the funds right now. MSME requires the funds right now to pay to the labor, to pay for the raw material, to pay for the electricity, for the rent, for the water bills and such. The MSME has to get the money right now only. So MSME, now the buyer is saying that, okay, I will not be able to do the business because I will only be able to pay after 2 months. Now the MSME, the seller do not want to lose the business. So MSME allows that, okay, the MSME is giving the tables and chairs right now, is supplying the order right now, but the buyer will pay after 2 months. So here there is a bill invoice that is created, that the MSME has sold the products to the buyer, and the buyer will pay after 2 months. The buyer has to pay 1 crore. Okay. So 1 crore is the trade receivable for the MSME that the MSME will receive at a later on date. Now the MSME needs the money right now. So MSME can go to the banks, MSME can go to the NBFCs, that this is the bill invoice, and against the bill invoice, kindly give me money. Okay. So if the MSME, let's say the MSME, it is going to the bank or to the NBFC to get the money against the bill invoice. That this is the bill invoice of 1 crore. That is the money that will be released after 2 months by this particular buyer. So MSME is selling the bill invoice to the bank or the NBFC. So MSME is particularly selling the bill invoice to the bank or the NBFC. Now the bank or NBFC will purchase this bill invoice, let's say at a discount rate of 10% or 15%. Okay. So the bank is discounting the bill invoice at the discount rate of 10%. That means the 1 crore discount rate of 10%. So that is 10 lakh rupees. So the MSME is only getting 90 lakh rupees. So this is the idea, that the MSME needs the funds right now. So MSME can get the MSME against its bill invoices, against the trade receivables, it can get the money. Okay. If the MSME needs the money right now against its bill invoices, against the trade receivables, it can get the money from the bank or NBFC. But MSMEs face constraints, MSME face limitations in obtaining adequate finance, particularly in terms of their ability to convert their trade receivables, the bill invoices, into liquid funds. So MSMEs were facing problem. MSMEs were facing constraints in getting the funds against their bill invoices. To address this issue, the RBI, the Reserve Bank of India, has over time authorized setting up of trade receivables discounting system. This system is particularly for the MSMEs, so that the MSMEs against their bill invoices, they can get the adequate funds. Okay. So basically, the RBI authorized setting up of trades platforms in the country for facilitating financing of the trade receivables, that is financing of the funds owned to a business by its customer following the sale of the goods and services. So for financing the bill invoices of the MSME sellers. So I hope the idea is clear. First of all, till now, any confusion? So MSME, they form the backbone of the country, and the RBI knows that the MSMEs are very important for the functioning of the country. They are having a major portion in the manufacturing sector. They also has a great percentage in the exports. They form a huge part of the GDP, 31.1% of GDP, as well as they employ a huge part of the labor force. So they are the second largest employer after agriculture in India. So MSMEs have great value in the country, but the MSMEs face constraint in obtaining adequate finance against their bill invoices. They want the money, they want to continue the business, but they face the problem in getting their bill invoices into liquid funds. Okay, so that's why the trades platform was launched. That's why the trades platform was launched. So what is this trade plan? What is this trade platform? What? How does it function? So first of all, trades is what? Trades is the trade receivables discounting system. Trade receivables, these are the funds that are owned by the buyer to the seller. Okay. So there is a bill invoice that is stating that okay, this is the fund, let's say 1 crore, 10 crore, 15 crores. These are the funds that are owned by the buyer to the seller, right? So this is the bill invoice. This is the bill invoice, or this is the trade receivables. Trade receivables. So these are the receivable. This is the amount. This is the amount. This is the funds owned to a business by its customers. Okay. So trade receivables discounting system. Discounting system basically means that if let's say if a MSME is going to the bank or NBFC, that this is the bill invoice worth 1 crore rupees, the bank will not provide 1 crore directly, because the bank also needs to make profit, bank also needs to earn something. So bank will discount this bill invoice. That means let's say the bank is only having the discount rate of 8%. Okay, so the bill is of 1 crore, the discount rate of 8%, that is 8 lakh rupees. So the MSME will get 92 lakh rupees after the discount of 8 lakh rupees, 8%. So the MSME will get 92 lakh rupees. So this is that the trade receivables, the funds discounting system, that the MSME is able to get the immediate funds at a discounted rate, because the MSME needs the immediate fund. So MSME has to let go of some value. So this is the basic idea. This is the basic idea. Okay. So trade receivables discounting system. Under this process, what happens? So there are multiple trades platform in the country. So there are overall 5 trades platform in the country. Now the supplier is supplying the goods and services. The supplier, that is the MSME, is supplying the goods or services to the buyer, to the corporate, or it can be a government department. Okay, so MSME is supplying the goods and services to the buyer. Now the MSME has delivered the product or services to the buyer. Now, basically, the MSME is not getting the funds right now. The buyer is saying that buyer will be able to pay after 1 month or 2 month or 3 month. So that the MSMEs can get the adequate finance, the MSMEs can get the adequate funds immediately on the immediate basis. That's why the RBI launched this TREDS platform, and this is the whole process that happens under the TREDS platform. So supplier first of all supplies, the MSME supplies the goods and services, delivers the product to the buyer. Now the supplier uploads the invoice. So the bill invoice is uploaded on the TREDS platform. So the supplier, that is the MSME, logs into the trades platform and uploads the invoice for the receivables, that this is the bill invoice, and the buyer owns 1 crore rupees or 10 crore rupees or 15 crore rupees, whatever the amount is. Now buyer verifies and approves the invoice that this is correct, this is the correct invoice, and I agree that I own 1 crore rupees and this is the correct bill invoice. Okay, so buyer verifies and approves the invoice, confirms the authenticity and approves the invoice. Now this invoice is converted into factoring unit. Factoring unit is a standard nomenclature, the standard naming convention used in the trades platform for the invoice or the bill on the system. So basically the invoice has got or has been uploaded. The invoice has been uploaded on the trades platform. So now it will be called the factoring unit, that will consist of the information that okay, the bill invoice, the buyer has to pay. This is the buyer ABC that has to pay 1 crore rupees on like after 1 month on a particular date. So invoice is converted into factoring unit. Now so now many of the financiers, they bid. The financiers will start bidding. The financiers in the trade platform. So basically MSMEs, they do not have to go individually to multiple banks or NBFCs. There are multiple financiers in the trades platform. On a particular trades platform, there are multiple financiers, multiple banks, ABC Bank, A Bank, B Bank, C Bank, there are multiple NBFCs, let's say X NBFC, Y NBFC, Z NBFC. So there are multiple financiers, there are multiple banks, multiple financial institutions, the NBFCs on the TREDS platform, So these are the financiers. Now the financiers will bid. The financiers, they will bid for this bill invoice. Bank A, discount rate of 15%. Bank B, discount rate of 12%. Bank C, the discount rate of 8%. NBFC X, discount rate of 13%. So they are bidding, like the different bids are being given. Okay, so which is the bid that the MSME will choose? MSME will choose the least discount rate, that is 8% here. Okay, that is 8% here. So MSME will choose the bid, the supplier, that is the MSME, will accept the best bid, that is the least discount rate. The least discount rate. So here the least discount rate is 8%. So if the bill invoice is 1 crore, the 8% will be the discount rate, and the MSME will get 92 lakh rupees. Okay, because 8 lakh has been discounted. So this is the idea that financiers, they bid. They put the bid. So here multiple financiers are there. So MSME do not have to go individually to multiple banks, to multiple NBFCs to get the bill discounted at the best rate. Basically, the MSME just have to upload its bill invoice in the TREDS platform, and the multiple financiers will do the bidding. The financiers bid and the supplier accepts the best bid. Now M1, that is the TREDS platform, it generates the settlement instruction for debiting the financier. So money will be deducted from the financier, that is bank C here, for whose from whose bank the bid has been accepted. So money will be deducted from the financier, from the bank C, and money will go to the MSME. Okay. Now after 1 month, or after the expiry of the bill invoice, let's say after 2 months, the maturity happens of the bill invoice, and now the settlement instruction for debiting the buyer, now from the buyer account, the money will go to the financier, because the financier, the bank C, has already given the money to the MSME. Okay, has given the money to the MSME. So this is the settlement that is happening. And when after, let's say 1 month or 2 month, whatever is the maturity time, the money will be sent from the buyer account to the financier account, to the account of the bank. So MSMEs can operate without facing irregular flow of their operational funds, and the MSMEs, so the TREDS platform was launched so that there is faster access to working capital for the MSMEs for their continuous operation. Buyer's account is debited automatically for the financier, and the financier provides the money to the MSME. Okay, financier. So if transparent and competitive financing, here multiple financiers are there, so the MSME knows that okay, there are multiple bids, and the MSME can choose the best bid, the least discount rate. So this is the idea. So this is about the TREDS platform. Now the RBI has launched, or RBI has released the updated directions for the TREDS platform 2026. Okay. Now the applicability, first of all, these directions, they are applicable on the entities authorized by RBI to operate TREDS platform under the Payment and Settlement System Act of 2007. So basically there are multiple entities, like here you can see that there are 5 entities that are authorized to operate the TREDS system. So when we were discussing in the last session, in the previous session, we were discussing the master direction on the entities authorized to operate the payment system. There we discussed that okay, there are 5 trades, there are 5 entities that are authorized to operate the trades platform. Okay, so basically these are the entities: the trades limited, C2FO, Credex, Mint, receivable, RXIL. So these are the entities that are allowed to operate the trades platform. So in the country there are 5 trades platforms. Okay, there are 5 trades platform on which the MSMEs can upload their bill invoice to get the bidding from the financiers. Now, the applicability, the directions are applicable on the entities that are authorized by the RBI to operate the TREDS platform under the Payment and Settlement System Act 2007. So, these directions are applicable on the entities that are authorized to operate the TREDS platform. Now, buyer, in the whole scenario in the TREDS platform, the buyer is any person liable to the seller whether under a contract or otherwise, against an invoice or bill of exchange to pay any trade receivable. So basically, buyer is someone who is liable to pay. Factoring unit refers to the trade receivable in the form of invoice or bill uploaded either by the seller or by the buyer. If the seller is uploading the bill invoice, then it is called factoring. If the buyer is uploading the bill invoice, it is called reverse factoring. Okay. Now, financier, all entities or institutions allowed to undertake factoring business as per the factoring regulations. Okay. So, financier is all the entities, institutions that are allowed to undertake the factoring business. Seller is MSME in the TREDS platform. The seller needs to be MSME. A TREDS is a technology platform on a digital or electronic network for facilitating factoring of trade receivables through multiple financiers. So basically, TREDS is a technology platform. It is a platform on a digital or electronic network for facilitating the factoring of the trade receivables, for the trade receivables to get discounted and the MSMEs to get the funds. Receivables means the money owned by a debtor or a buyer and not yet paid to the seller. So receivables is basically the funds owned by the customer to the business, to the MSME. Assignment means transfer of the right to receive the payment due. So before, the MSME had the right to receive the payment, but now the financier, because the bill invoice has been sold to the financier, so basically the assignment is happening of the bill invoice, the assignment is happening of the bill invoice to the financier. Now the financier has the right to receive the payment due. This is the idea of the assignment, that is the transfer of right to receive the payment due. Before, the MSME had the right to receive the payment due, but now the bill invoice and this assignment has happened. That means transfer of the right to the financier to receive the payment due. This is the idea. This we will discuss, Avnish, in the coming slides. So do not worry about it. Okay. So authorization, an entity shall seek authorization. Now coming to the authorization for the TREDS platform. So an entity shall seek authorization for setting up an operating TREDS platform in accordance to the RBI's master action on authorization to operate a payment system. This we have just discussed in the previous session itself. Okay. So you can see the detailed direction on the authorization to operate a payment system. So this we have just discussed in the last session of Finance 360. So the entity shall seek authorization for setting up an operating TREDS platform. The entity must be a company incorporated in India, registered under the Companies Act and the Memorandum of Association. That means while laying down the company, the Memorandum of Association, the basic rules and regulations and the basic idea that was laid down for the company, for the entity, must cover the proposed activity of operating as a TREDS platform. So the entity must be a company incorporated in India. It must be registered under the Companies Act, the Memorandum of Association of the company, the basic idea about the company of the entity, the basic legal document regarding the establishment of the company, regarding the functioning of that company. So the memorandum of association, the document regarding the establishment and functioning of the company, of the entity, must cover the proposed activity of operating as a TREDS platform. The entity regulated by any of the financial sector regulator, it is regulated by SEBI, it is regulated by RBI, it is regulated by IRDI, shall apply along with a no objection certificate. Okay. So if an entity is regulated by, let's say, SEBI, or if a entity is regulated by IRDI, so the entity regulated by any of the financial sector regulators shall apply with a no objection certificate from the financial sector regulator within 45 days of obtaining the no objection certificate. So basically, if let's say XYZ entity wants to operate as the TREDS platform, so the XYZ entity, it is sending the application to the RBI. Now, first it needs to take the no objection certificate from the SEBI, let's say, because the XYZ is the entity under the regulation of SEBI. So XYZ, that is under the regulation of SEBI, has to take the no objection certificate from the SEBI, and then the application can be sent to RBI within 45 days. So the entity that is regulated by any of the financial sector regulator shall apply with a no objection certificate. This no objection certificate should have been obtained within the past 45 days. So within 45 days of obtaining the no objection certificate, the application can be sent to RBI. That is the idea. Okay. So the entity shall apply along with a no objection certificate within 45 days of obtaining the no objection certificate. Chalo. The entity having foreign direct investment shall be guided by the consolidated FDI policy of the Government of India and the relevant foreign exchange management regulations on this subject. So the entity, they are allowed to have the foreign direct investment, but they should be following the rules and regulations, the directions. Now the capital requirement. So for the TREDS platform, if an entity wants to establish a TREDS platform, the applicant shall have a minimum net worth of 25 crore and shall submit a certificate in the certificate from its statutory auditor. Okay. So this is the idea. The applicant which wants to establish a TREDS platform, it should be a company incorporated in India. The applicant shall have the minimum net worth of 25 crores and shall submit a certificate from its statutory auditor. Existing entities authorized to operate TREDS platform. So these are the existing entities which are authorized. These are the existing entities which are authorized to operate the TREDS platform. So the existing entities which are authorized to operate the TREDS platform, they shall ensure that the minimum net worth criteria is met latest by March 31st, 2028. Okay. So this is the net worth requirement, and the existing entities, they need to meet the net worth requirement latest by 31st March 2028. And the new entities that want to become the TREDS platform, they have to get this minimum net worth of 25 crores. Now, the minimum net worth shall be maintained on an ongoing basis, that even after getting the certificate, even after getting the authorization, you have to continue having the minimum net worth. Okay. Conduct of business. Now, which are the entities that can be under the TREDS platform? Okay. So what are the participants of the TREDS platform? So who are the participants of the TREDS platform? It is the sellers, that is the MSME, the buyers, the financiers, the insurance companies, as well as the credit guarantee fund trust notified by the Government of India for participating in TREDS platform. So see, before there were four participants under the TREDS platform: the sellers, that are the MSME, the buyers, that can be the corporates or the government departments and such, the financiers that finance the bill invoices, and the insurance companies that provide the insurance. Okay. So that if the buyer defaults, then the financiers burden can be reduced. So this is the idea that we will discuss further in the coming slides also. But there used to be four participants in the TREDS platform. But now it has been said that the credit guarantee fund trust notified by the Government of India for participating in the TREDS platform, this is another participant in the TREDS platform now. Okay. So this is the idea. Now what this entity will do, or what this trust will do, that we will discuss. It will basically provide the guarantees. Okay. So now there are five participants: seller, buyer, financier, insurance companies, and credit guarantee fund trust notified by Government of India for participating in TREDS platform. Now, scope of activities of TREDS platform. So TREDS platform shall bring participants together for facilitating, uploading, accepting, bidding and discounting, and the settlement of the invoices or bills of sellers. So that means end-to-end process from the uploading of the invoice till the settlement of the funds between the financier and the MSME, and between the buyer and the financier. So the end-to-end, like till the settlement process, everything happens on the TREDS platform. It shall put in place. Now the TREDS platform should put in place a suitable mechanism to establish the genuineness of the uploaded invoices or bills, to see that actually the transaction has happened, actually this is a genuine bill invoice or the bill of exchange. Factoring units, that is the bill invoice or the bill of exchange, once accepted, will have the same legality, will have the same sanctity, enforceability as physical instruments or agreement in writing, as provided under Negotiable Instruments Act 1881. So basically the factoring units, that is the bill invoices, the bill of exchange, once they have been accepted by the buyer and it has been uploaded on the TREDS platform, and it has been accepted on the TREDS platform, it should have the same legal enforceability as physical instruments or agreements in writing. That is the idea. Okay, so it's not like that the buyer, if the buyer agrees that yes, this is the bill invoice, this is the amount that the buyer has to pay to the seller. Okay, so if the buyer agrees, so later on the buyer cannot reject the claim. Okay, the buyer cannot reject the claim later on. So it shall undertake customer due diligence. The trades platform should undertake the customer due diligence of the buyers in accordance with the Know Your Customer directions of the Reserve Bank of India, so that it can be identified that the buyers are the like they have the they are following the Know Your Customer directions. Okay, so the information of the buyers is available. So trades shall undertake the customer due diligence of buyers in accordance with the Reserve Bank of India Know Your Customer directions, so that the buyer information can be completely provided under the trades platform. Now, the trades platform shall put in place necessary validation mechanism to ensure that seller is an MSME, because only the MSME sellers are allowed on the trades platform, and the funds due to seller are credited in the seller's bank account only, that the money is only going to the MSME from the financier and not to a third party account. The trades platform should facilitate discounting of factoring units, that is discounting of the bill invoices, the bills of exchange, through transparent bidding by multiple financiers, so that the MSME can pick the best bid with the least discount rate, enabling flow of funds to sellers, so that the sellers, the MSMEs, can get the flow of funds, they can get the money from the entities, providing intimation to the banks holding working capital or cash credit accounts of buyer and seller. So basically, the trades platform has the responsibility to inform the banks of the buyer and the banks of the seller, which are providing them the working capital or they are providing them the cash credit. See what happens now. Think about it. Let's say that the seller has uploaded the bill invoice on the trades platform and has got the money from the financier. Now, the same bill invoice is being used to get the money from another bank. The same bill invoice is being used to get money from some NBFC. So, this is wrong, right? Because the same bill invoice, let's say it is the seller or the buyer, they are using the same bill invoice to gather money from multiple institutions. So, this is wrong. That's why, to maintain the credibility and to maintain the idea that only one bill invoice is used at one place to get the money from the financial institutions at one time. That's why the trades platform, whenever they are allowing the bill invoice on their platform and the bill invoice is getting discounted, the MSME is getting the money from the financials. So the trades platform have to inform the banks that have the working that are providing the working capital or cash credit to the buyer or seller, so that the same bill invoice cannot be used again, which has been used on the trades platform or under the trades platform. Okay, so the information has to be provided to the banks holding working capital or cash credit accounts of buyer and seller, so that the same bill invoice, same bill of exchange cannot be used twice or thrice. Service note, the trades platform also serves notice of assignment in favor of the financier. That means before, the bill invoices were under the name of the MSME. Now they are being transferred to the financier, because the financier is the one that will get the money from the buyer. So the assignment is basically the transfer of the bill invoice. So serves notice. The trades platform also serves notice of assignment in favor of financier and ensures that the buyer makes the final payment directly to the financier, so that the buyer can make payment to the financier. The trades platform also enable further discounting, rediscounting of the discounted factoring units by the financier. Let's say the bank or a NBFC has discounted multiple bills, but now the NBFC needs the money immediately. It cannot wait for 1 month or 2 months. So the NBFC can sell the bill invoices to another NBFC or to another bank. So this is the idea that the trades platform, it allow further discounting or rediscounting of the discounted factoring units. The discounted bill invoices can be rediscounted by the financiers, resulting in its assignment, the transfer of the bill invoice in favor of the other financiers. Such transfer shall be subject to relevant instructions issued by the RBI as applicable. So the financiers among themselves also, they can do the transaction of the bill invoice that they have purchased. Okay, so bill invoice can get rediscounted. Factoring units, that is the bill invoices, the bills of exchange discounted under the trades, shall be without recourse. Let's say the buyer is not able to pay to the financier. Like after 2 months, the buyer is saying that, okay, I have become insolvent, I have become bankrupt, so I will not be able to pay to the bank or the NBFC. Now the bank or the NBFC has already given the money to the MSME. right, had already given the money to the MSME 2 months back. So now the buyer is saying that, okay, I will not be able to pay to the financier. Now this is without recourse. Without recourse. Without recourse means that now the financier cannot ask the MSME to pay back, to give the money back. So that is the idea. So basically, under the REITs platform, if the financier is providing the funds to the MSME, now MSME is free of the MSME is free of mind. Now the MSME, basically the financier, uh, took this bill invoice of 1 crore and paid 92 lakh to the MSME. So financier is making the profit of 8 lakh just by discounting this bill invoice, and the financier will get the 1 crore after 2 months from the buyer. So basically, financier is making the profit of 8 lakh rupees because the financier paid only 92 lakh rupees, while the financial will be getting 1 crore rupees. So basically, financier is making the profit of 8 lakh, and for the profit, for the returns, the financier also took the risk. Now, let's say that after 2 months, that is in August, the financier do not get the money from the buyer. The buyer is saying that, okay, I have become bankrupt. I will not be able to pay the 1 crore rupees to the financier. So here the loss will be of financier. So this is known as without recourse. Without recourse means now the financier cannot ask back the money from the MSME. Okay, financier cannot ask the money back from the MSME. This is the idea of the without recourse. Factoring units, that is the bill invoices discounted under the trade, shall be without recourse to the seller's default, if any. If any default happens by the buyer, shall not be the responsibility of trades. Will the money will not be taken back from the MSME. So the financiers, to get them some safety, let's say the financier is providing against the bill invoice of 1 crore, the financier is providing the MSME 92 lakh rupees. That is, the discount rate is 8%. So financier will get after 1 month, let's say the financier will get from the buyer, or after 2 months, the financier will get the 1 crore rupees from the buyer. So financier is making the profit of 8 crore rupees. But the financier is afraid that what if the buyer do not pay after 2 months? The financier is afraid that what if the buyer do not pay after 2 months? So in this case, the financier can take the insurance policy that in case the buyer defaults, the insurance company will provide the coverage. The insurance company will provide the coverage. So the financier is the one that is paying the premium, is paying the regular premium of, let's say, 1 crore per month. That is for 2 months, 2 crore will be paid. So in short, the financier is paying the premium to the insurance company to get the insurance coverage, that if in case the buyer defaults, the insurance company will cover it. So this is the idea that the financiers may avail the insurance facility for the trades transaction. That's why the insurance companies are also part of the trades platform. Sellers, buyers, insurance companies, financiers, credit guarantee trust. So insurance companies are also part of the trades platform because the financials, they can take the insurance facility for the trades transactions. Premium for insurance, the premium for insurance shall not be levied on the MSME or the seller. If the financier is taking the insurance coverage, insurance policy, so basically the financier should pay the premium, not the MSME. The MSME will not have this kind of responsibility. Credit insurance shall not be treated as credit risk mitigant to avail any prudential benefits. That means against the money that is given by the financier to the MSME, this is basically the financier will get the money back from the buyer after 2 months. So this is basically a credit that the financier is giving. Okay, so there is some risk weight, there is some risk attached to this, that what if buyer do not pay after 2 months. So in case there is some risk, against the risk weight, against the risk, the banks have to maintain certain capital. Against the risk, the NBFCs also have to maintain certain capital. So it is said that even if a financier, the bank or the NBFC is taking the insurance policy, still they will have to maintain the prudential requirements. It's not like that you are taking the insurance facility, so you will not have to maintain the capital now against the risk. No, still you will have to maintain the capital against the risk. That is the idea. Okay, so financiers can take the insurance facility for the trades transactions, but the premium should not be taken from the sellers. Premium has to be paid by the financier only. The credit insurance shall not be treated as the credit risk mitigant to avail any benefits. Now, the platform shall ensure that participation related master agreement includes the buyer's unconditional obligation to pay on the due date. See, the buyer has the unconditional obligation to pay on the due date. Buyer cannot later on say that, okay, we do not like the quality of the goods, so we will not pay 1 crore, we will only pay 50 lakh. The buyer cannot say that, okay, now we have got some defected products, so we will not pay 1 crore, we will only pay 70 lakh. No, the buyer, if the bill invoice is of 1 crore, the buyer will have to pay 1 crore. Otherwise, the buyer will be considered to be defaulted buyer, and its credit score will decrease, or it can be considered bankrupt also. So basically, the buyer's unconditional obligation to pay on the due date, and the buyer cannot set off the value in the bill invoice. If the bill invoice is of 1 crore, the buyer will have to pay 1 crore to the financier, because the financier has already paid to the MSME. Seller's undertaking or declaration to the effect that in respect of goods or services under the bill invoice, no finance has been extended by any other financier. So basically, MSME has to give a declaration, the undertaking, that the bill invoice that is uploaded on the TREDS platform, against that there is no other loan that the MSME has taken. Against this bill invoice, there is no other money that the MSME has taken from the other financial institutions. So basically, the seller has to provide the undertaking or the declaration to the effect that in respect of the bill invoice, no finance has been extended by any other financier. Since financing a transaction on TREDS will result in assignment of receivables in favor of the financier. So basically, the MSME has the right to collect the money from the buyer, but the MSME is selling the bill invoice to the financier. So the financier has the right now. The financier has the right now. Okay. So since financing a transaction on TREDS will result, if the financier is providing the money to the MSME, the bill invoice, the right will be transferred to financier. Okay, so if the financier is providing the money to the MSME against the bill invoice, the right will be transferred to the financier, right? So financing a transaction on TREDS will result in assignment of the receivables in favor of the financier. The platform shall file the said assignment with the central registry. So whenever the bill invoice, its right is being transferred to the financier, it has to be informed to the central registry, the CERSI. That is the idea. Chalo. Coming to the last points, financiers may avail guarantee in respect of the factoring unit, that is the bill invoice, from any credit guarantee fund trust set up by the government of India. So think about it, that the financiers, they are providing the money to the MSMEs. Okay, so basically the financials, they are helping the flow of the funds towards the MSMEs. Now many of the financials, they are afraid that what if the buyer defaults? Even if they are taking the insurance policy, they have to pay good premiums for this insurance policy, because the insurance policy covers the default, right? So maybe it is very expensive to get the insurance policy also sometimes. So here the RBI said that there will be the credit guarantee fund trust that will provide the guarantee in certain cases for certain MSMEs, so that the MSMEs can get the continuous flow of funds. So financiers, they can take the guarantee in respect of bill invoices from the MSMEs from any credit guarantee fund trust set up by the government of India. So the credit guarantee fund trust set up by the government of India, which is allowed to participate on the TREDS platform, they can provide the guarantee against the bill invoices of the MSMEs to the financiers, so that the financiers, they have some guarantee that, okay, if the default happens by the buyer, at least 50%, 60%, 70%, or maybe 100% of the default will be covered by the credit guarantee fund trust. That is the idea. Okay, so the credit guarantee fund trust can provide the guarantee to the financier. So financiers can avail the guarantee, can take the guarantee in respect of the factoring units from any credit guarantee fund trust set up by the government of India, so that the financiers, they have certain backing, they have certain guarantee that if the buyer defaults, they will be able to get some money from the entity or from the trust. Legal proceedings initiated by one participant against another, if any, will be outside the purview of the trade. So if the if the financier is doing any legal proceeding on the buyer, so this will be out of the purview of the trades. Now this legal proceeding will be under the different authorities. The platform shall be in custody of all the master agreements. So that means whatever agreements are between the financiers, MSMEs, buyers and such, so these agreements, they should be under the custody of the TREDS platform. Now, clearing and settlement, the platform shall facilitate efficient and seamless settlement of transactions between the financier and the MSME and between the buyer and the financier. Okay. The settlement mechanism can be used to facilitate all type of transactions and functionalities enabled on threads. Okay, insurance premium collection, claim settlement, fees, commission, all of these different kind of transactions can be settled under the threads platform. Any confusion now, anyone? Other provisions, so reporting requirement for authorized TREDS entities to be submitted by TREDS entities to respective regional office of the Department of Payment and Settlement System RBI. Net worth certificate has to be submitted by September 30th. System audit report has to be submitted, TREDS statistics by 7th of next month and such. Now, this was the press release that RBI released. Now, we have discussed the master action. In the press release, the RBI notified that the RBI has issued final directions on threats. Okay, so RBI has issued the final directions on threats. The RBI was working on rationalization and harmonization of the existing regulatory framework for trades, and that's why the new directions have been released for the trades platform that is more rationalized and harmonized. Removal of the requirement of due diligence of MSME sellers, so now it has become easier to onboard the MSME sellers because there is no requirement of the due diligence or following the KYC norms separately for the MSME sellers. The due diligence have to be fulfilled for the buyers, but there is no requirement of due diligence for the MSME sellers now. So it is easier to onboard the MSME sellers, and it is easier for the MSME sellers also to get the facility under the TREDS platform. Revision of the capital requirement applicable to TREDS operators. So net worth criteria is now decided at 25 crores. So these were the areas where the RBI wanted to approve, and now the RBI has released the final directions for the TREDS platform for the TREDS. Okay? So the trade receivables discounting system platform operators and participants, the master action was released for all the operators and the participants. This has reference to the previous directions. Now the previous directions will not be followed. The new directions have been released by the RBI, and in the new directions, in the master action, the RBI has streamlined the capital requirement for authorized entities with that of other non-bank payment system operators. So now the trades need to have the minimum net worth requirement. So the trades operator, the trade platform, they need to have the minimum net worth criteria fulfilled. Simplify onboarding process for the MSME sellers. Now there is a very simple process for onboarding the MSME sellers. Permit financiers to avail credit guarantee cover for exposures undertaken on trades. So basically now the financiers, they can take the credit guarantee cover for the exposures under the trades platform, and this cover can be provided by the credit guarantee fund trust. Okay, so this is the idea. All of this we have discussed now. Any confusion, anyone? Avnish, your query is also clear. Your question is also. So all of this we have discussed, and the remember that the minimum net worth requirement is 25 crores, and the existing entities, they have to meet it by March 31st, 2028. Okay. Chalo. Now the whole directions, they are very very important from the objective point of view as well as from the descriptive point of view. So the question can come that the TREDS platform, it is the question can come directly that the MSMEs, they face constraints in obtaining adequate finance, particularly in terms of their ability to convert their trade receivables into liquid funds. What is the initiative taken by the RBI uh, under the TREDS platform, and what are the new directions that the RBI has released for the TREDS platform for the MSMEs? So first you will have to inform that how MSMEs are important for the country. Then you will have to inform about the TREDS system, okay, the TREDS platform, that the new directions have been released by the RBI regarding the TREDS platform. It is streamlining or it is rationalizing. The new directions are rationalizing and harmonizing the directions. There is the streamlining the capital requirement, simplifying the onboarding process for the MSME sellers, permitting financiers to avail credit guarantee cover for exposures undertaken on the trade, so that the financiers can provide further funds to multiple MSMEs with the credit guarantee also, so that the financiers, they are also having lesser risk. So this is the idea. Okay. Now, this is the first question. I hope you will be easily able to answer this question with reference to the participants permitted on the TREADS platform under the RBI Directions 2026. Which of the following combinations correctly represent all the eligible categories of participants? Before there were 4 categories, now there are 5 categories of participant under the TREADS platform. So try to answer this question. Next question is that an entity seeking authorization from RBI to establish and operate a TREADS platform is required to satisfy the certain capital requirement. Which of the following correctly states the minimum net worth requirement? So try to answer this question. Okay. So there are the 2 questions that you have to answer. Do answer the questions in the comment section below, and you will get the PDF of the session in the Telegram channel. So this is it. Thank you everyone. Thank you for joining. See you in the next session.